James Grant, al meer dan 30 jaar actief op Wall Street, uitgever van het tweemaandelijks blad voor investeerders Grant's Interest Rate Observer, connoisseur, enfant terrible, vlijmscherp criticus, geliefd bij de belegger en gehaat door centrale bankiers als Ben Bernanke, Janet Yellen en Mario Draghi. Een van de weinigen die de grote crisis in 2008 zag aankomen en daar toen ook voor waarschuwde. En sindsdien is zijn reputatie onomstreden. Over Griekenland, over het aanzetten van de geldpers in Europa en over een nieuwe mogelijke crisis. James Grant, welcome.
Thank you. It's nice to be here.
Pleased to have you here. Now, it's called, your magazine is called Grant's Interest Rate Observer. These rates are so terribly low.
You can't see them anymore.
No.
Yes, I have a problem with my business model. One can't see them there. Some of them are less than zero. So I must rethink this.
Okay, we'll talk about that. Just trying to get to know you better. You're a financial journalist.
I am.
You're a financial historian.
Yes, I confess to both.
And you're also an investor?
I am.
So you put your money where your mouth is?
Yes. Why shouldn't I?
Well, I don't know.
It would seem insincere if I didn't invest in something I believed in. So yes, I do.
You do
I do, with full disclosure to my audience, my far-flung audience.
Okay. And what maybe is so special about you and your magazine is that history plays a large role. What does history teach you?
Well, history teaches us to be surprised less. It can't teach us exactly what's going to happen. After all, historians proverbially are not rich as a class of persons. But what history can do is to remind you that certain things in human affairs are recurrent, and that people with money often do things that they ought not to do.
Yeah.
People seem insistent upon buying high and selling low, and actually one ought to buy low and sell high. That's my reading of history.
And did you already find out why people are so persistent and why they make the same mistake over and over again?
Well, the Russians have a folk expression, stepping on the same rake. And the rake in question is one of emotion, really. When things are going up, everyone is happy and one is carried along with the crowd. Optimism is contagious. But as things go up, they become less value-laden. They become less desirable as investments. So paradoxically, the better one feels about something in investing, the riskier it is likely to be. And equally paradoxically, the more despondent one feels about a certain class of asset, the more attractive it is with regard to value. So one ought to be euphoric at the bottom and despondent at the top, when actually one is the opposite.
Okay, so at this moment we should invest in maybe Russian assets, or?
Well, I'm not going to prescribe investing for the audience, but if you ask me what I'm doing, I have been buying some Russian stocks, in particular a Russian bank that happens to be very well managed. Alas, it lives in Russia and is regarded by the world as highly undesirable for that very reason, but the bank in question is Sberbank, and it is one of the better managed banks in all the world, but it is priced as if it were going broke. I think it is not going broke.
No one wants it.
No.
But you do.
I do. I bought a great deal of it for me, not for the world, but in December.
Now looking back at the crisis that maybe we haven't overcome yet fully, you seem to have, you saw it coming.
I did.
What was your secret then in 2006 or 7?
The secret was to read the newspapers. House prices were in orbit. Debt was being mispriced, meaning that anybody with a pulse, proverbially, could get a loan for a house, for equities, stocks, to buy a company called private equity. Money was for free, as it were. One could raise loans with next to nothing in the way of bona fides with respect to credit. So that told me that things were getting very dangerous, and sometimes I felt as if I were going crazy because the rest of the world was more or less insistent that things were just perfect. Yeah. And among those people were the central bankers and the powers on high.
You saw it, and no one else saw it.
Well, some did. I was far from alone. But Grant's interest rate observer, yes, we did see it.
If you compare the situation then to the situation now, also at this moment there's a warning from IMF saying there's an illusion of liquidity. People are, again, investors are borrowing money to buy shares. Do you recognize something?
Well, sure. Mario Draghi is fond of saying that we are in uncharted waters with respect to Greece. That's his point of reference. We are in all too familiar waters, all too well charted with regard to the mispricing of many investment assets owing to the manipulations of our central bankers. So some of this is familiar and some of this is new. New, for example, is the level of interest rates. In the Netherlands, we have records going back into the late 1500s. Never have rates been so low since the late 1500s.
Here's the historian speaking.
Yes, authoritatively, I read that someplace. So in some respects, we are, I think, in a riskier place today than we were in 2006. Mm-hmm. Once we had the gold standard in money, and today we have the PhD standard. We are in thrall to former tenured academics. And never before in the history of finance have so many college professors exerted so much power and influence.
Okay, so you'd rather have the gold standard back?
I would indeed.
I think it was in the 70s that we left it, didn't we?
We did.
Yeah, and that was
precipitously.
Yeah. What happened exactly to refresh our minds?
Well, America promised too much and had too little in the way to back up those promises. America insisted upon waging a war in Vietnam, upon spending a great deal of money on what President Johnson was pleased to call the Great Society. Mm-hmm. And we emitted dollars into the world, much as Mario Draghi is producing euros today. However, the difference then was that we had undertaken to redeem those dollars with gold at a fixed price. So the Bank of the Netherlands, the Bank of France could and sometimes did come to the United States Treasury and say, here are my greenbacks, these pieces of paper. I would rather please give me gold, which you have promised to pay me $35 for an ounce. Now it's, of course, $1,200 an ounce. But the gold standard checked the power of governments to expand money and to inflate it.
And since we left it?
Well, there has been a great deal of credit, a great deal of money printing. And in the past several years, we have embarked on a truly unique experiment in money printing.
Yeah, because there's now something called QE.
Ah, yes.
Quantitative easing.
Yes. What does that mean exactly, by the way? Oh, yes.
I don't know. Do you?
I've been studying the situation. Some years ago, there was a wonderful letter to the editor in the Financial Times of London, and the correspondent said, "Dear sir, I think at long last I understand the meaning of the phrase quantitative easing, which means money printing. However, I no longer seem to understand the meaning of the word money." Now, a couple of days ago, April 15th, I think, Mario Draghi was giving a briefing to the press, and there ensued this commotion that a woman leapt up on the rostrum and showered him with what the press called glitter. I like to think that it was confetti, and the confetti was symbolic of the euro, and of the dollar, and of the yen, and of these currencies which can be manipulated and can be materialized from nothing. They are non-corporeal. They exist on a computer hard drive or in the cloud.
And this is what you're very worried about putting on the money machine, making money, not covered by gold or anything else.
Well, money used to be, and it seems to me ought to be, it's a judgment, but it seems to me ought to be a weight or a measure. Mm-hmm. We don't go adjusting scales and measuring rods and rulers because we are dissatisfied with the length of a piece of paper. We hew to
but can you
standard.
I understand, but can you explain what exactly is at this moment, for instance, for the average man in the street, the dark side of this QE?
Well, the dark side is to come, although some of it is now visible. What we see now is the ostensible sunshine. We see, for example, if you are a company in Europe and want to raise money, you can borrow, even if you are speculative grade, or as they say, junk grade, you can borrow at an interest rate beginning with the number 3, never before heard of. Extraordinary. Now, that's good, right? Because more investment, more borrowing means more investment, more jobs, I guess, right? That's what they say. Except if the interest rate is the government imposed one rather than one that is discovered in the open market, it's likely that it is an artificial rate. Now, interest rates are important because they are the traffic signals of a market economy. They can't all be green, otherwise we'd have innumerable crack-ups at intersections, right? It'd be a terrific chaos. So what central banks of the world over are doing is to press down interest rates and to artificially inflate credit, meaning borrowing debt.
Yeah.
And so what has happened so far is a lot of pretend and a lot of easy money. Some people think that's good. The stock markets are highs, right? It's a lot of confidence around among people who hold assets.
But it's too easy, this money.
Yes,
that's what you're saying.
Yes. I mean, if it were that easy, wouldn't we all have been much richer many hundreds of years ago if it were this easy to make money free?
Yeah. What would you have done if you were Mario Draghi?
I resigned. Because he is undertaking to act in the role of a central planner. What the central banking is a species of central planning. It's command and control. It reminds me a little bit of Poland, 1957, right? What they do is to say, all right, we have consulted our econometric models. You wouldn't understand them, you ordinary mortals, but we have consulted and we deem it necessary to press down interest rates and to make credit prolific and to sprinkle all of the continent of Europe with these colored pieces of paper that we call euros.
I understand what you're saying, but resigning is maybe too easy for Draghi.
So I have to stay?
You have to stay, you have to do something. What would you do?
I would say, ladies and gentlemen of the jury of the public, let us reconsider the road we are traveling on. Let us move away from command and control to a market-oriented financial system in which, by the way, capitalists earn the profits and also bear the losses. Right now we have a system which is neither capitalist nor exactly socialist. Is a species of financial socialism in which the great and the good get to keep the dividends and the taxpayers get to help to bear the losses. This wasn't the way it was meant to be.
So we should start with not saving banks anymore.
Yes, we should let the stockholders pay the freight of a failed bank. Now, this was the way it worked until, in my country, until not so very long ago. I dare say it worked in the continent of Europe the same way. So the stockholders would get a capital call, meaning they would be required to stump up more funds in the event the bank in which they were a fractional investor became impaired or insolvent. Now, that went the way of the black and white television set. But isn't that a more equitable way of proceeding than saying, all right, this banks have failed, too bad, now you taxpayers will bear the freight.
But do you want to leave everything to the market?
Pretty much.
Markets are hysterical too sometimes.
They are. They are less hysterical when they are allowed to function and when people who have to bear losses are allowed to bear them. What makes markets especially unhinged and hysterical is the knowledge that in the event of a crisis, the government will be there to help out the people with money. We live not in the Garden of Eden, but in the land of the fallen human being, and no human institution is perfect, and markets certainly leave much to be desired. But given the choice between a command and control regime managed by non-elected, former tenured college professors on the one hand versus a decentralized, market-driven, individualist regime on the other, give me the latter.